Hello guys, I welcome you all to this new segment by Trade Brains, and this segment is very much in demand. Through this segment, we'll be doing a fundamental analysis of all the top companies which are listed on the stock exchange. Now you must be saying that everyone does fundamental analysis. How is yours different? I won't say it's different, but the quality of the work will be different because we'll be going in in-depth detail about the company in terms of its competitors, in terms of its product, in terms of its future outlook. What is the management doing? Are they doing everything in order? How do the numbers look like? And based on that, you can make an informed judgment whether you should be investing in that company or maybe not investing in that company. So the first company which we'll be talking about is of course the biggest company in India, and I'm talking about Reliance Industries. We'll break down each and every business of Reliance Industries, understand what is it doing there and what kind of competition does it face, and we'll also see what is the likely prospect of Reliance Industries in that particular segment. And at the end of the video, we'll also talk about all the numbers, all the financial ratios, and how does the balance sheet of Reliance Industries looks like. So we'll be doing a lot of work in this video, so please don't forget to subscribe this channel and don't forget to hit that like button because there's a lot of hard work goes into it, and a bit of support would be really appreciated, and please share it with your friends. So let us jump right into our discussion without wasting any time. So the company which I'm talking about today is Reliance Industries. It is of course one of the biggest companies in India, and it is headed by one of the richest man in the world, and is of course the richest man of India. I'm talking about Mukesh Ambani. The company has grown leaps and bounds. It was started by Dhirubhai Ambani, and he had a very big vision. He always wanted to make one of the biggest companies in India, and by God, haven't they lived up to the expectation of him. It is diversified into various segments of retailing, telecom, energy, and various other sectors. We'll try to break down in each and every segment. So the first segment of our fundamental analysis is called the competitive analysis, and how is it doing in comparison to its competition. The first segment which I'm talking about here is the retail segment. The retail segment in India right now stands at about $900 billion. And by the year 2024 and 25, the segment is expected to cross $1,300 billion mark. And who will be the leading players? Of course, the leading giants of the industries, and Reliance Industries is one amongst them. And even the organized retail market is right now standing at $230 billion plus dollars. So the market is huge in retail segment. And I tell you one fun fact, about 25% of revenue of Reliance Industries comes from the retail segment. I'm sure you were not aware of it, and this is actually very important information. If one of the biggest company of the country gets quarter of its revenue from that segment, you can imagine the focus which they are putting on that particular segment. Another important information about Reliance Industry is that it is one of the only company which is to be featured in the players of global retailing players to watch out, and this report is published by Deloitte, and Reliance Industries features even in this report also. So various companies which are part of retail segment of Reliance Digital, Reliance Jewels, Reliance Trends, Urban Ladder, MOAT. They recently also invested about $240 billion to acquire nearly 25% in even the delivery app of Dunzo. So they are foraying into delivery segment also. Plus in the grocery segment, they have got their own Reliance Smart Point and Reliance Fresh. And I'm a personal user of those products, and their service is actually very good, and they also price their product in a very competitive way there also. They are also the owner of online pharmacy delivery app also called as NetMeds. They are doing very well, and it is also one of the top players in the medicine delivery app, that is NetMeds. Now, having understood the various product offerings, we have to understand who are the major competitors for them, and they have got a very stiff competition in this segment. The biggest competitor is none other than Radhakrishna Damani, one of the ace investors, and Avenue Supermart is one of the biggest competitor for them, and their major product is DMart. Plus, they've also got competition from Aditya Fashion and Retail. The retail business is challenged by those two big players, and actually in a way it's a good because it pushes Reliance to come out with more innovative and better product. Now, if you were to again look at various other players which are competing them, then you also have Tata coming into foray, and recently we also got a news that IPL will also be title sponsored by Tata now. So Tata is also trying to get into entertainment and retail sector. Coming to the next competitive segment, and I'm talking about the segment of media and entertainment. And this is one of the only segment in which Reliance is not a leading player. They have got major competition, and their competition comes from Zee and Sun TV. They both have got better revenue in terms of entertainment segment as compared to what Reliance Industries does. The major product for Reliance in entertainment segment includes Nickelodeon, Voot, Colors, Money Control, CNBC TV 18. So they have also got a big reach in this segment, but they are well challenged by other major players in this segment. The next segment which I'm talking about is one of the favorite segment for Reliance Industries, and it is the petrochemical segment. They feature in the list of top 10 players in this segment, and they majorly focus on business to business model. They basically deal with other big players in the industry and they supply in bulk to those kind of players. They are also well challenged in this sector. One fun fact about this sector, during the time of lockdown and pandemic, Reliance petrochemical business was operating at 98% of its capacity. And can you guess what were the other players operating at? Nearly 60% of capacity. So this is how well they are developed in this sector, plus they've got a lot of muscle power in this sector. So Reliance Industry is of course the leading player in the petrochemical segment. They've also got one of the lowest cost producing when they're producing products like ethylene, propylene and aromatics. So petrochemical segment is very well covered by Reliance Industry. And another important segment which they've covered in the petrochemical segment is the hydrocarbon segment. They've also partnered silently with Shell to enter into exploration and production business. The exploration could be in the form of finding oil field, hydrocarbon products, maybe oil wells. They're also well invested in that segment. The major competitors for Reliance Industries in this segment are ONGC, Petronet LNG, Indian Oil, Asian Energy, to name a few. So if you see, we have so far covered three sectors. They are leading two of them and they are closely in competition in the other sectors. But if you think of it, everywhere Reliance Industry is one of the major players to reckon with, and you can imagine the sky is the limit for them. Now the point is this: what does future hold for Reliance Industries? As I already told you, they are one of the major players of petrochemical business, and still 50% of their revenue comes from this business. Now, which is where the problem lies. As we are all aware that fossil fuels are limited by nature and they are bound to be exhausted at certain time in future. So what Reliance is trying to do, they're trying to also divert their focus into green energy, and they are pledged to invest nearly $8 to $9 billion over the R&D in this sector over the period of next 3 to 4 years. They have set up almost 4 gigafactories, which is costing about $8 billion for the storage of electricity, batteries, which are green by nature. So Reliance Industry is trying its hard to shift their focus, or at least to divide their revenue in different segments rather than being hugely dependent on only one of the products, and which actually comes at time because the management is thinking on those lines and they know future they would be challenged. So they are preparing themselves for that challenge right now itself. Now, how does the future look in the telecom sector? I haven't talked about telecom sector so far. Why so? Because they had their biggest development and they had their biggest breakthrough once Reliance Jio was established. If the reports are to be believed, they have got a big customer base as compared against their two major competitors, that is Airtel and Vodafone Idea. And we know what all problems Vodafone is going through at the current moment. So for them, the real challenge majorly comes from Airtel. Although Reliance Industries missed its target of rolling out 5G technology by the end of 2021, but they are surely on their way to roll out 5G technology very soon in this year itself. Another important factor about Reliance Industries in the retail segment lies also in the number of stores which they open up. They're constantly in the lieu of acquiring other major players and the players which are smaller, but they have a big impact in the market, and they have nearly 13,000 retail outlets. That's a huge number even for a country like India. So Reliance Industry is constantly focusing on diversifying its business into various spectrums. Now the next question which comes to everyone's mind is that, is Reliance Industries a moat? Now moat was a term which was first introduced by Warren Buffett. So what exactly is a moat? Supposedly, if you have a nice or a big palace kind of thing, so to protect yourself against the enemy, you kind of have a ditch around it which is filled with water and all the other protective equipment, so it protects you against all the other threat which is external by nature. And in the case of business, the moat would be a term used for the companies which are big, well supplied, their products are good, their future outlook is good, the management is good, and they have got a lot of financial power. And if I were to look into each and every perspective, then Reliance is definitely one of the moat in this industry. They're doing very well and they could be challenged, but looks like for the next few years or for a few decades, Reliance will be one of the top companies in India. Let us have an understanding of the financials of this company. Fundamental analysis is both qualitative and quantitative. So far we have talked about the qualitative aspect of Reliance Industries. Let's do a bit of research in the numbers bit also. Now, if you look carefully at my screen, the debt situation of Reliance Industries has actually become much better. In 2021, they raised almost 2.6 lakh crores in under 200 days by stake selling and also by rights issue. And in the same year, they also declared negative net debt. If you look at over the last 3 years, that is 2019, 20 and 21, their debt to equity ratio has almost come down from 0.7 in 19 to 0.65 in 20 to 0.32, which means Reliance is progressively going towards being debt free. Now, what does that do? That builds the confidence of people who are invested with them, and in also future, if they want to raise a little bit more money for a bigger project, their debt situation would allow them to do that. What is the current valuation of Reliance Industries? Right now it is valued at around 16 lakh and 63,000 crore rupees, which makes them one of the biggest companies in India, and the second biggest company of course is TCS, which is nearly 13 lakh 50,000 crores. So there is already a gap of about 3 lakh crores in terms of valuation. Now if I were to look at the other financial ratios of Reliance Industries, the first ratio which I'll be talking about is the price to sales ratio, which was in the year 2019 at 1.42, 1.18 in 2020 and 2.77 in 2021. So what does that mean? Because they got also debt free, the confidence of the investors also increased, and which is where price of the shares of the company in terms of the sales which is generated has also gone up. It going up too much isn't always a good thing because the company looks to be overpriced, but that is for the trust which has been built by Reliance Industries. The price to earning ratio has also gone up. It was 20.20 in 19, 17.49 in 2020 and 26.23 in 2021. Profit margin over the years. Now this is the most important point. If this increases with time, it is the best thing for the company, and which is what is done by Reliance Industries. It used to be 6.98 in 2019, which has gone up to 6.65 in 2020, and in 2021 the number were 11.39%. So the profit margin has touched the double-digit mark for Reliance Industries. Price to book value ratio. Now this is, if it's low, it's actually good because it shows that the company still has a lot of value in it. It was 2.09, which reduced to 1.57, and when the ratio reduced, people thought it's a very good investment opportunities. And in 2021 the ratio is again gone up to 1.84. So these were the important ratios which you want to analyze, and looking at these ratios you can still say there's a lot of value if you want to be investing in Reliance Industries. Now the next important consideration while doing any fundamental analysis is understanding the promoters holding and overall what is the management vision. The first thing which I'll talk about is the management succession plan. Now if you were recently in the news, we got to hear that Mukesh Ambani is already planning its succession plan. He's also looking to about his retirement plans, and what he has done is he's saying that the younger generation, which are his 3 kids, that is Akash Ambani, Isha Ambani and Anant Ambani, are ready to take up the major role, and he is dividing them into Reliance Telecom, retail business and the energy business. He's saying that the new generation is ready to take up the bigger challenges. He hasn't yet mentioned how will the transition happen. Now if the reports are to be believed, he is looking for a succession plan which was followed by Walton family of Walmart. So what he's doing, he's setting up various trust and moving the funding into trust, and which will be controlled by Mumbai listed flagship company of Reliance Industries, and this data has come from Bloomberg. Now another thing which I look into while doing the fundamental analysis is seeing that how is the top management taking its salary or increasing its salary as against what is the increase in the net profit over the last 3 years. So I've got data for 2018-19, 19-20 and 2021. First of all, we'll talk about Mukesh Ambani. In the year 2018-19, his salary was 15 crore rupees, which was 0.04% of the net profit, which was again same in 2019-20, and in the year 2020-21, he didn't take a single rupee of salary. Nikhil R. Meshwani, he's one of the other top directors of Reliance Industries. His salary was 20.57 crores in 2018-19, 24 crores in 2019-20, and in 2020-21 his salary was 24 crores, which is 0.05 to 0.06%. If you look at for other three directors also, Hitel R. Meswani, PMS Prasad, and Pawan Kumar Kapil, the salary is only going in proportion only if the net profit of the overall Reliance Group increases. So it's not that the top directors are taking out a lot of salary and they don't worry about what the profit is. They get their salary increased only when the profit of the company goes up, so which is actually a very good sign. Management is thinking about the investors and futures and not just filling up their own pockets. And the last important thing which I look about while doing any fundamental analysis is understanding the promoter holding of the company. The Ambani family holds about 49.38% of the total shares of the Reliance Industries, and the remaining 50.62% are held by public shareholders, including the FIIs, DIs and other corporate bodies. The major holding comes from Euro-Pacific Growth Fund, which has about 2.43% stake of Reliance Industries in the current year. The government of Singapore owns about 1.1%. LIC of India has increased its stake from 5.07% in 2020 to 5.98% in 2021. Other qualified institutional buyers, SBI Mutual Fund, FIIs also hold a small portion of Reliance Industries stake. And I'll try to wrap up this video by understanding the 4 most common financial ratios used by any investor, that is the current ratio, debt to equity ratio, interest coverage ratio and the sales growth. In the year 2021, the current ratio is 1.34, which is considered to be good, which means the current liquidity position of the Reliance industry is in a very good place. The debt to equity ratio has also reduced. Remember, we talked about debt to equity ratio coming down to 0.32 in the year 2021. Interest coverage ratio has also remained stable. It was 4.34 in 19, 3.43 in 2020, and in 2021 the ratio is 3.59. The sales has also remained steady over the last 3 years. So this is all about the qualitative and quantitative analysis. Do let us know how do you find the content of this video. Do you like it? If you want us to add another few aspects, we'll be doing that for the next companies. Please put all of those in the comment section. We'll be more than glad to implement it. I again thank you for your patient hearing. This is a new initiative by us by which we discuss the fundamental analysis of the companies and make sure you know everything about the company before taking an investment decision. All your investor friends who are looking to invest in any of these companies, forward these videos to them so at least they have a decent idea before starting on their investment journey. I again thank you for your patient hearing. I'll again see you in future videos where we discuss more about the companies. Thank you so much.